delighted to be here. I'm Rachel, I'm a co-speaker and author of Soul Trader, and I'm delighted to be here with the wonderful Heather Dunn, one of my favourite business people in the entire world. You're the owner of BOSS.
That's right.
Back Office Support
Solutions.
And today I really wanted to talk a lot about the basics of starting up a business, which can be very overwhelming for anyone who's starting a business. And I know that your business helps people with everything pertaining to the financial side. So just in a real nutshell, what it is that you do here.
Well, the very first thing that you need to be aware of when you're starting a business and why you would come to someone like BOSS is number one, to decide what structure your company has. Are you a sole trader? Do you need to register as a company? Should you be a partnership? And what happens when you do all those things? So that's the first and most important decision you've got to make. And very simply, the difference between, and I've written the three down here, limited company, limited partnership, and sole trader, is that these two...
Which is self-employed, this one, isn't it?
You got it. Yeah. Sometimes also called sole trader, self-employed, The big difference between these is that this one, the limited company, and this limited partnership, limits the liability of the business to the company entity, and it doesn't ever come to you, the person. And what do I mean by that? I mean that if the worst happened and someone sued your company and the courts found in favor of the person suing you, they can come and they can take your company, take the company assets, but they can never go to you, the person. They can't take your home or your car. So a lot of people are very attracted by the limited liability in these two structures. But they're slightly more expensive to run than being a sole trader.
And there's a little bit more paperwork, isn't there?
There's a bit more paperwork, but in general, the general rule of thumb also tax-wise is if you earn more than about £30,000–40,000 a year in profit, you're better off tax-wise being a limited company because you're taxed higher as a sole trader or a partner. And
I think the thing at this point that's probably worth saying is that all the stuff we're going to talk about today is really relevant to the UK, and some things, of course, change, but lots of the spirit of this will be useful wherever you in the world you are, and you need to just find out what the specifics are.
Absolutely. Every country is slightly different. The tax position even changes in the UK from year to year. For instance, when I set up BOSS 11 years ago, the first £20,000 of limited company profit was tax-free. So everyone became a limited company. It's not quite so attractive now.
Right. Yeah. Okay, so I'm going to leave you to... So I'm starting out.
Yep.
And then, like so many people, and they're just befuddled. They know they need to start up. They're really excited about what they're doing.
Yep.
But they know, shall I be self-employed, sole trader, or a limited company? And they don't quite understand. Might be websites and so on. But sometimes it can just seem a bit dusty or dry. So can you just tell us where do you start?
Sure. Well, I would say you should always talk to someone professional. Any accountant worth their salt, or even lawyer worth their salt, will give you an hour's free meeting. So take advantage of it.
And I did exactly that, and I found it really useful because they can talk you through which of those is apt for you and your circumstances, because it might be that you're employed, there might be other hangover things related to that, so what's apt for you.
That's right. And also talk to other business owners. There's nothing better than people that have been through it themselves. And I think most people are really happy to share their experiences. So let's say you've now made the decision to which one of these three to go through. I'm now going to tell you what you need to know to be in business in the UK in each of these three structures.
Yeah, and can I just say, before you say that, I think that maybe one of the things that, in relation to these conversations that they're having, it might be worth thinking, what does the advice say? What kind of customers have you got? And what they want? Because sometimes it might point in that direction.
Great point. If you're going to be marketing, if your customers are other businesses, particularly big businesses, they don't want to do business with a sole trader. They want the comfort of a limited company. It also makes you look bigger than you are. Day one when I started BOSS, I registered as a limited company when it was me in my second bedroom on a computer. I looked bigger to the outside.
Absolutely, and I did the opposite. I started out here because I wanted something that was really straightforward. I was just getting into it, and then there came a point where I was wanting to try and attract more companies and so on, and therefore this became the most obvious one to do. So there's that combination.
And that's really common to start out here when you're not quite sure what things are going to look like, and then move to one of these when it's more appropriate.
And I like the thing you were saying there, Heather, about chatting to accountants and other people, because that will help you. And also it means that as you go along that journey, you found out what people can actually do business with and who can help you along that journey, right? Because as it becomes complicated, you're going to need people whose counsel you can...
Or you need different people. You need different people at different stages.
Right, okay.
Very few people on day one need one of the big 4 accounting firms, but you know what? You might in a few years.
Right.
Yeah,
right,
yeah,
right,
good
right.
point.
I think that the only thing that strikes me now that we've touched a little bit about this where we need to do tell the tax man, and this one we were an entities. This one, I guess, has got some of the benefits of both. This is where a number of individuals have come together, but they have got some.
You're absolutely right. This is a really interesting combination of the two.
Mm-hmm.
A limited liability partnership, as the word partnership sounds like, has to be more than one person. Whereas you can be a sole trader on your own and you can be a limited company on your own. In a partnership, you need more than one person. But the partnership itself, from a tax purposes, is what's called transparent.
Mm-hmm.
You look through the partnership to who owns it and you tax them that way. So you're taxed the same way as if you're a sole trader. You're just a group of sole traders coming together in a partnership. But still, your liability is limited.
Right.
This is by far and away the most uncommon structure.
It is, isn't it? Yeah.
It's really common in kind of professional services firms. Lawyers are quite often partnerships, as are big accounting firms.
Yeah.
It's a really good way of being able to split the profits of a company any way you want. But the tax isn't great. You're always better tax-wise in here.
Okay.
The most famous partnership, of course, is John Lewis here in the UK. They're a partnership.
Okay, great. So those kind of things will help. Between those conversations, you can decide which works for you, and then you can decide. So then I'm mindful about stuff like the money and who do I need to tell, or how do I. So walk us through.
It's really important, particularly if you've been an employee your whole life.
Right.
You get taxed at source. Your employer takes away your tax. You don't need to report anything unless you've got other income like rental income or shares or dividends. You don't even need to fill in a self-assessment tax return every year.
Right.
It's a different world here.
Right.
You've got to be very aware about who you need to tell and what you need to report to them.
Such a good point. Yeah.
So if you decide to be a sole trader, the only person you have to tell is HMRC. So
Her Majesty's Revenue Customs.
Exactly.
Yeah.
Within 3 months of starting business as a sole trader, and when I say starting business, I don't mean thinking about it, I don't mean spending money, I mean getting a customer.
Right.
Within 3 months of trading, you've got to call up HMRC and say, hello, I'm a sole trader, I've just started my own self-employed business.
Yeah.
And they just write your name down, and you now need to submit a self-assessment tax return form every year. And I'll come to that in a minute. But that's the only person you need to tell.
Great.
Nice and simple. For these two, to create the company in the first place, you've got to go to something called Companies House. Companies House is the register in the United Kingdom, England, Wales, where you register the fact that you're either a company or a partnership. So, you get a unique name, you can't take anyone else's name. There's certain words you can't use in your name. You can't use the word bank, you can't use the word royal. And again, the list changes all the time. And you get a unique company number that's tracked all over the world now. So you have to register with Companies House, and they in turn inform HMRC that you've now been created as a company. So HMRC will then contact you directly. So that's who you have to tell when you start out. And then each of these people require slightly different reporting.
Right, and I think at that moment I'm going to let you, Karen, talk, and I'm going to reach for the camera so I can bring it closer as you walk us through that.
Okay.
That's fantastic.
Sure.
Yeah.
So now, it's actually worth me pointing out that if you've created a limited liability partnership with a partner...
The listeners are going into a spin now because I just took that off of the thing, but they're now okay. Yeah.
It's really important you talk to a lawyer
and
you get something called a partnership agreement in place. And what that does is that's an agreement between you and your other partners that decides who's going to put money in, how do you take profits out, what happens if one of you wants to leave, what sort of things you think both partners need to agree on, and what can be agreed by just one without asking the other. So that's really important. The equivalent in a limited company is called a shareholders agreement. And although there are definitely templates out there on the web where you can just go and, get a basic template and fill it in, it's a great idea to talk to a lawyer about getting the real specifics in there.
And I couldn't agree with you more there. The more that's at stake, the more specific, the more logistics, the more people involved, you want to get that counsel so that you can think it through and see if it's right for you and so on.
Now, if you're the only shareholder in the limited company, don't bother. It's a waste. It's only if there's more than one of you. So, okay, we were going to talk about the reporting next. Companies House requires something called an annual return to be submitted on the anniversary of your company creation every year. There's a little fee associated with it. I think it's £13 or £14 a year now. Pretty simple form to fill in, but you categorically have to do it every year on the anniversary of your company creation. So if I just look at my calendar up here and assume that I created my company in January, every January I need to do an annual return at Companies House.
Right.
The second thing you need to do is with HMRC, you need to submit annual accounts. And people often get these two things confused. They sound so similar. You also need to submit your annual accounts to Companies House. You have to submit them to both places. And it's worth noting that because Companies House is a public institution, anyone can spend £1 and buy your annual accounts. Doesn't mean they can see how much you pay yourself. It doesn't mean they see all the details, but there's a certain amount of detail that's in the public domain as a limited company where there's nothing in the public domain as a sole trader, and that's another thing to keep in mind. So partnership also needs to do annual accounts submitted to both Companies House and HMRC. And notice there's none of this reporting requirements over here, none of it. The next thing you have to do is a limited company, you need to put in a corporation tax return every year to HMRC. Now both the annual accounts and paying your corporation tax are due 9 months after your year end. So in September is when you need to do annual accounts and your corporation tax payment. For some surreal reason, you don't need to submit your corporation tax return until December, but you need to submit the corporation tax payment in September.
Right, and that note, one of the things that I'd say at this point, Heather, that, and this is so useful, is that I felt that and my tip is that if you're somebody who's very au fait with numbers, figures, and this kind of organisation, and perhaps you enjoy it, as some people are, or you've got perhaps a bit of background, then it might well be, especially if your affairs are straightforward, you might be able to do much of this stuff that we've talked about yourself, isn't it? But I think if you're not, and I certainly wasn't, then I felt the best investment I made, especially early on, was to get an accountant so that I could say, what's this thing I've been sent? When do I need to fill it in? And to be able to ask those questions. So or a firm like yours that does a blend beyond that, I think it's so useful, isn't it? Because it's peace of mind, and it means that you can then get on with running your business. Because also some of the letters and so on they can be complex, isn't it? It's not intuitive.
Particularly in your first year, to have someone talk you through what all of these letters mean when you first get them. You might find you're really comfortable with it after someone's educated you, and then the next year you can take it on. Right. Everyone's different. And I'll talk in a little bit about what are some good systems to put in place to help you do all these things. Okay. So as a quick little aside, people always ask me this, I have to pay corporation tax, how much is that? Well, currently in the UK, it's 20% of your profit every year. So if you're nervous about money and you're nervous about how much you need to save, if you save 20% of everything you sell to a customer and put it away in a savings account, that will be more than enough to pay the tax man when the time comes. But we'll talk about that in more detail later. Here in the limited liability partnership, you don't do a corporation tax return because that's only relevant for a corporate. Instead, you do what's called a partnership tax return. Very, very similar. There's no set amount of tax the way there is with companies, limited companies, because it all depends on your normal income tax, and there's big bands. So the partnership tax return needs to be done for the limited company. Now, as a sole trader, still notice there's nothing here. It's nice and easy. The one thing you do need to do is a self-assessment tax return every year. You also need to do one if you're a partner, in a partnership, and you also need to do one if you're a director of this company.
Yeah.
So everyone needs to do this one.
And as you were saying before, Heather, it's interesting, isn't it? Because there are all these different bits, and sometimes it happens to me all the time. I think, haven't I just done this? Haven't I just done that? Yeah, now there's another one. So it's really good just being mindful of these things. And I would also say, if you're working with an accountant or what have you, get them to press them, say, what are all the things I need to do in a year, and when do I need to be ready, and so on.
And I write them all down in your calendar.
Right.
So let's put the self-assessment tax return on the calendar. So the tax return itself has to be submitted by the 31st of January every year. And you need to pay your self-assessment tax twice a year. You pay some of it, self-assessment tax in January, and some in July. So there's 2 payment dates, but 1 return. And for corporation tax, there's 1 payment date and 1 return.
Right.
So I would definitely have your accountant map out your year for you. Put them in your calendars, make sure you don't forget. Don't just say to yourself, oh, my accountant deals with it, I don't need to think about it. It's your responsibility. Okay? So that's all the reporting requirements we've got. And now to your other point about, okay, can I do this myself? What can I do? What do I need to get someone else to do?
And I'm thinking at that moment, what I'm going to do is I'm going to pause it right there. So we'll come back for that part 2, so you can walk them through that. So what we've got at the moment is that we've got the year, and we've got these business structures that you walked us through in terms of if they're limited liability partnership, or whether they're sole trader, the people who you need to tell, company's house, HMRC, and there's the variances in terms of these returns that you need to do, and to get that advice and a guidance beforehand. So we'll come back, and you said when we come back you wanted to particularly pick up on
systems,
right?
How you track anything, what help you should get, what professional insurances and services you need to know about when you're running a business in the UK.
That's fantastic. We'll come back. Thank you so much for all your help so far.
Thank you, Rashid.